Welcome to the channel. I'm James, and today we are looking at the Coca Cola company, ticker symbol KO. They have just released their earnings this morning, and I'm going to be going through them today right now. Then we're going to be looking at my discounted free cash flow spreadsheet to see what the new fair value of Coca Cola is using the discounted free cash flow models and the Buffett-Graham intrinsic value. Let's just quickly talk about the share price. It is currently $66.09 a share, up 1.29% today. So the markets have reacted pretty favorably to those earnings. And if we look over the last year, up 23%, on the last year today, up 11%. So if we compare it to the S&P 500, let's get SPY up in there. Over the last year today, Coke has actually beaten the market because it's gone up 11% and the market is down 11%. If we compare to the last year, you can see it's also beaten out the market very handily. S&P 500 has been relatively flat for the last year, which is absolutely crazy. This is with the sell-off on the past few days, and Coke is up 23%. So let's touch upon some of the highlights on Coke. Coca Cola earnings beat Wall Street estimates as revenues jump 16%. If we go down, you can see that earnings per share 64 cents adjusted compared to 58 cents a share, and revenue, as I said before, 10.5 billion to 9.83 billion. So this is up massively. Let's have a look at this now. This is the latest earnings Q1 2022 released this morning. And before we get into that, can you please give a like on the video if you enjoy anything about this video? It really helps me out, and subscribe if you're not already. First thing we want to look at is the revenues. And is the revenue increased? Yes, it's gone from 9 billion, just over 9 billion in 2021 Q1 to 10.4. So that is a 16% increase. Cost of goods are actually up as well, up slightly more, 17%, 3.5 billion to over 4. And then this gives us a net income which is up 24%, 2.2 billion in 2021, and now that is 2.7 billion. So what I'm going to be doing today, which is a little bit differently, is we're going to be implementing these numbers on my sheet immediately, and we're going to be working it out together and to see what this is. So we have Coca Cola here. First thing we want to do is go to Yahoo Finance and look at the previous numbers. We look at the last 4 years of numbers here because that's what Yahoo Finance give us. So let's add in the previous year totals. Now we don't have the totals added up, but if we look at the quarterly, this is the previous quarter breakdown. This is 2021 as we saw here in the earnings, 9.02 billion. So what we want to do is grab these guys here, put them in our spreadsheet. And unfortunately, we just got to do a bit of paste values. And then we add in the latest number, which is 10.491 billion. So 10.491 billion, which gives us 40 billion. Now, this is just a bit of rounding on this sheet there. So the numbers do look a bit lower, but it'll all make sense at the end. So let's paste the values in. Next, we want to be looking at the profit. We said before, net income is up to 2.8 billion. And we'll do the same thing again. We'll get it from Yahoo Finance on the annual. This is the yearly, so we get the last 3 years, just under 9 billion, 7.7 to 9.7. We add these into the sheet, and then we get the quarterly numbers from Yahoo Finance again and add in the latest number. So these are the 3 most recent quarters. We'll paste these in here, and then what we'll do is grab the most recent number, which is 2.781. Let's add that in here, 2781000. And that gives us 10.3 billion of profit in the most recent values, which you can see is breaking its previous years, which is good to see. Next, we want to be looking at shares outstanding. This is more just to see if Coke are introducing more shares or diluting the investors with more shares or buying back their shares. Now, unfortunately, Coke have bought new shares, issued new shares, 4.332 billion, up from the previous quarter, which was just over 4.3 billion. So let's add that into the sheet. What we'll do is quickly go to Yahoo Finance, and you can see it was in 2018. They have previously been buying back their shares, but it's now up. So let's add this number here. And then what we'll do is add the most recent number, which is 4332. So 4332000. Now, unfortunately, this is just showing that they are overall adding new shares, which is diluting shareholders. But if they can invest those shares wisely, that is the key thing. Next, we're on to one of the main things we look at, free cash flow. So to get free cash flow, we need to go to the cash flow statement. and it is cash from operating activities, which is here, divided, take away capital expenditures, which is purchases of property, plant, and equipment. Now you can see net cash flow from operating activities is down 1.1 billion to 623 million. Now the reason for this is the big increase in the net change in operating assets and liabilities. Now if we look at cash flow and see what they're saying, cash flow from operations was approximately 620 million, decline of 1 billion to the prior year. A strong business performance was more than offset by the impact of cycling and timing the working capital benefits from the year prior and higher 2021 annual incentives for the current year. So that is Coke's reason for why this has gone down. But what we want to do is sort of think that yes, this is the case, but maybe it will not be this in the future. So this could be just a bit of a blip, but it will be taken into account when we look at our free cash flow statements. Let's just go back to the sheet. Now we want to go back to Yahoo Finance and get the cash flow numbers here. We want to get the last 3 years, which is 8 billion, 8.4, 8.6, and 11.2. So that was a very good year for Coca Cola. Add these to the sheet, and then we will get the more recent numbers, which is, of course, we get the quarterly, get the free cash flow for the previous 3 quarters, 3.6, 3.4, and 2.7. You can see that we have 1.4 billion, which was the previous number. Obviously, Coca Cola, they don't nicely add the numbers up for you, whereas I will. Let's add those numbers there, and then what we want to be doing is taking, well, let's just do it anyway. We've got 623 million, take away 217, so 623 million divided by a take away 216. It was 216, wasn't it? 217, sorry. And that gives us a free cash flow of only 486 for the quarter, but on the year that is 10.2 billion. So let's add that in here. And next what we're going to be doing is looking at the free cash flow rates, which we are calculating here. The average free cash flow rates is 9.6 billion, which is a free cash flow ratio of 28 and 30. Now we want to look at analyst estimates. We can go to analysts here. Now this is for the current year of 2020 and 2023. We'll go on the average 41.75 and 43.92. So 41.75 billion, 43.72 billion. And then what we're doing is looking at the WACC, which is the weighted average cost of capital for Coca-Cola, 6.8 according to Finbox. And then the expected growth of the company, which is back on Yahoo Finance, 7.19 for the next 5 years. And then we want the corporate bond. I look at here and we look for sort of the corporate bonds. These are long maturing. So it looks like the highest one we can see is really about, there you go, 4.2 in 2050. Let's go 4.2. Right, so we've done a lot there. Now we go to our free cash flow statement. We go to our discounted free cash flow model. What we have to do is type in the averages here. This is the averages of Coca-Cola. And then we will see what this generates us. So now we've added all the averages. Let's see what this gives us as a free cash flow statement. So actually it says that Coke is slightly overvalued based on discounted free cash flow, 64.10, based on this year's numbers. So the reason for this is probably, as we said before, the free cash flow is slightly lower, but this is the averages. So if we're expecting revenue growth rate to expand at the previous amount, then yes. Coke's revenue has been going up, so let's give it a little bit higher on that. Let's just say they can match this year's and get it to about 45 billion, 47 billion. That would have them once again about fairly valued. So discounted free cash flow says Coke is fairly valued, but if we look at the Buffett-Graham intrinsic value model, that is actually saying it is not massively overvalued at the minute with $57 a share. This is due to the earnings per share and the expected growth rate. Expected growth rate is a little bit low, and the bond yield, which is 4.2. So about fairly valued based on discounted free cash flow models. Now these numbers are steadily growing. 2020 doesn't really beat its numbers till 2023, but overall about fairly valued where it is today. If Coke does drop, I think this is a good opportunity to buy it, but you can see it's been on a tear this year, beating out the market by quite a lot of percentage. Right, guys, thanks for watching the video. Please give a like if you've enjoyed it. Subscribe if you're not already. I have been away for a while, but hopefully trying to get back. And I'll catch you guys next time.